Japan's Softbank is buying 70% of Sprint. It's a deal that will make it the world's third biggest mobile operator in terms of revenue. It's the largest overseas takeover by a Japanese company in at least 12 years. The deal still needs the approval of Sprint shareholders and U.S. regulators. Mike Firn brings us the very latest developments from Tokyo. Mike, how are the shareholders responding to all of this?
Well, Softbank shares down almost by their daily limit at the moment, off by 9.3% after the first hour of trading here in Tokyo. Concerns that the company's paying too much for Sprint. We saw shares of Sprint closing down just 0.75%, and after hours trade they're off by about 0.9%, extending that. There was an initial bit of a boost, but then trending lower. Some concerns on that side as well. Now, this deal was announced after the Monday close in Tokyo in a very hastily put together news conference.
Two mobile phone company bosses shaking hands in Tokyo to seal a deal they hope will make them global players. This is not a merger of equals. The man on the left proposed the deal and he calls the shots. Masayoshi Son will make Sprint a Softbank subsidiary. Daniel Hesse stays on as CEO, but Softbank's founder gets to pick more than half his board and impose his own management vision.
For a challenger like us, the U.S. market offers compelling opportunities. What we learned in Japan can be used in the United States. So when Softbank and Sprint form a strong partnership, imagine what can happen.
Son is no stranger to turnarounds. He bought Vodafone's failing Japan unit 6 years ago. Now it signs up more customers every month than its bigger rivals and earns more from them. Sprint CEO managed to raise revenue in 7 of the past 9 quarters, but he says the company needs more cash to compete in a tough US market.
The financial infusion gives us, again, opportunities internally and externally that we haven't had since I've been here at Sprint almost 5 years, and particularly in this phase, which is the most constraining financial phase we've had in our history because of the heavy expenses associated with phase 2. This is pro-competitive and pro-consumer in the United States because it creates a stronger number 3 to compete with the duopoly of AT&T and Verizon.
Sprint shares will continue to trade on the New York Stock Exchange. Recent plunges in both companies' stock mean executives will have their work cut out, convincing investors who didn't join the sell-off that it's worth hanging on to their shares.
Mike, the first question that obviously comes to mind is Softbank offering Sprint shareholders incentive to give up their shares?
Yeah, it's offering $7.30, which is a big premium to the close. We saw Sprint ending the Monday session $5.69. So if you do give up your Sprint shares, you're going to get a bonus for it. Obviously, they don't want everyone to give up their Sprint shares because Softbank only trying to buy 70% of them. So they're also offering incentives for people staying with the remaining 30%. Softbank also trying to reassure its shareholders that they're not going to see their holdings diluted. They say they're not going to issue any more shares to pay for this. They went to banks for the money, and they say the banks actually said, is that all you want to borrow? Why don't you have some more? They say there aren't any debt concerns, although the rating companies aren't convinced. Also, Softbank committing to continuing to pay the dividends that it promised its own shareholders if they hang on to stock. But as I say, not convinced this morning. A big sell-off, 9.2% lower.
All right, Mike Firn, live for us in Tokyo. Thanks so much. For more analysis on this deal, I spoke to Chetan Sharma in Seattle. He's president and founder of Chetan Sharma Consulting. I asked him if this deal is going to shake up the U.S. mobile phone market and if it can help Sprint improve its position.
So it does help Sprint significantly in 2 ways. One is it'll provide infusion for their 4G build-out, which is their next generation network, and B, it helps them with handset procurement, so they can get the latest and the greatest handset at better rates, or probably even similar rates at what AT&T and Verizon get. And maybe the third advantage is that some of the applications and services that are successful in Japan, they can find their way through Sprint into the U.S.
One analyst says that there are no synergies in a Japanese company buying a U.S. telecom operator. I'm sure you saw that quote earlier today. Your thoughts?
I mean, it does. So it does help Sprint. On the negative side, for Softbank, they are undertaking a huge debt So combined that will be over $20 billion, which is no small change. And if something goes wrong, either because of the global economy or the competitive nature of the US market or the Japanese market, then it becomes difficult for SoftBank to pay off the debt in a timely fashion, right? And it puts pressure on their financials as a result. So clearly there are no synergies in terms of, because they're two different markets. But if you look at some of the bigger operators like Vodafone and Deutsche Telekom and Telefonica, they have been operating on this multi-country strategy for a long, long time. And so it's not unusual for operators to go cross-boundary to look for greener pastures or growth, because Japan is also saturated, US is getting saturated, Europe is saturated. And so I think we are just seeing the first wave of international consolidation. Clearly, each of the domestic markets are going in that direction, but it's kind of the first wave of international consolidation that will drive growth in the operator segment, on the mobile segment.